Hello, my name is Kirk Johnson with Brokers Mortgage Service, and I want to thank you for joining our brief overview or snapshot on President Obama and the U.S. Department of Treasury's Mortgage Reduction Bailout Program. Basically, what we're going to go into is just some brief details on who is eligible and who is not. I've done a lot of research on this, and there's a lot of information out there, and what you may want to do is grab a pen and a piece of paper, because I am going to be giving you some valuable websites and phone numbers where you can get information to see if you are eligible for the program or not. Basically, every homeowner or every potential homeowner needs to know this information. You want to keep in mind that not every lender or every servicer may offer the program, and some are going to have different guidelines. The guidelines that the government put out are general guidelines. So everyone can change up their guidelines just a little bit. You'll want to contact your local lender to find out more information if you are eligible or not. But this is going to give you some good information, just some background information on how the program works, and again, if you are eligible or not. Okay, the first information I'm going to give you is where you want to start. You want to start with Fannie Mae Freddie Mac website. This government program is only good for homeowners who have their loans serviced by Fannie Mae and Freddie Mac. If you have a subprime loan, any other type of loan, stated income, that type of loan, portfolio loan, jumbo loan, it will not qualify for this program. However, we will be talking about some other options you have later down a little bit down the road here on what you may be able to do if you have a subprime loan or if you have some sort of portfolio loan. There's been a lot of speculation and a lot of misinformation out there about what's happening with the program and how it works. And again, every bank and lending institution can impose their own guidelines. Okay, here is what the federal guidelines state. The floor rate is 2%. You're going to start it as low as 2%. It's going to be based on your debt-to-income ratio, your income, your assets, your liability. First off, let me say, if you have a good loan-to-value, you've been making your payments on time, you're not in any sort of financial distress, you have assets in the bank, this program will not work for you. And again, I do not do this program. You have to go through your current servicer. But what you want to do is, again, go to the Fannie Mae Freddie Mac websites or call them up. Find out if your loan is serviced by Fannie Mae or Freddie Mac. So again, the floor rate, the lowest they can go is 2%. That rate will stay stable for 5 years. After the 5 years, it will have an annual rate increase of 1% for the next 5 years to the capped rate of whatever the current rate is when you refinance. So let's say today the current interest rate is 5%. That's what it's been fluctuating at lately, between 4 3/4 and 5 1/4, and today is March 6, 2009. So let's say the rate is 5% today, and you are eligible for the 2% rate. You're going to be at 2% for the first 5 years. Year 6 is going to go to 3. Year 7 is going to go to 4. Year 8 is going to go to 5. And at that point, it will be capped, again, at whatever the prevailing rate is. I haven't really figured out exactly what they're going to cap it at. Most adjustable rate loans are capped when you go from adjustable to a fixed. They take what's called the 60-day mandatory, the Fannie Mae 60-day mandatory rate plus a half. Well, a 60-day rate is typically higher than you can get in a current refinance, and if they're adding a half a point on top of that, it's going to be even higher. So if you're eligible for refinancing at all, this program will not work for you. And actually, you probably don't want it. And they're going to scrutinize everyone. They're going to look into your assets, your income, your liabilities. You know, they're going to put you under a microscope. Why a lender would do this program is that lenders are actually receiving incentives from the federal government for each modification they do. Not all servicers, not all banks are required to do this. Only banks and servicers who have received TARP money from the federal government already are definitely required to do it. Actually, many banks right now are giving back their TARP money because there's so many strings attached to it for not making sense for the banks to even accept this TARP money. This was just released March 4th. Today is March 6th, 2009. The banks don't even have in place, or as far as I know, most of them don't even have in place their guidelines for this program. So it may take you some time before the banks can get up to speed and get their guidelines in place for exactly what they're going to do. The mortgage to be modified must have been originated on or before January 1st, 2009. So if you've received a mortgage since January 1st, 2009, you are not eligible for the program. New borrowers will be accepted until December 31st, 2012. Program payments, again, will be made for up to 5 years from the date of entry into the Home Affordable Modification. Monitoring of the program will continue throughout the life of the program. Now, here are some qualifying terms. The home must be owner-occupied single-family home. The home must be, again, the primary residence that will be verified. The home may not be investor-owned. The home cannot be vacant or condemned. So if you're currently in foreclosure, you can still qualify. First mortgage loans must have an unpaid principal balance prior to capitalization equal or less than $729,750, which means if you have a loan above $729,750, it will not qualify for this loan program. Again, if you're in the foreclosure process, it will temporarily suspend the foreclosure. There is currently no minimum or maximum loan-to-value requirements applying for this type of loan program. Okay, the borrower's income must be verified, requiring a signed 4506T. What a 4506T is basically a form that you will sign. It'll be sent to the IRS. The IRS will then, in turn, return your tax returns to that servicing agent. If you're a W-2 employee, you're going to require your last 2 months' worth of paycheck stubs and your last 2 years' W-2 forms. Okay, also, there has to be reason for imminent default. Every potential eligible borrower who calls or writes their servicing in reference to modification must be screened for hardship, such as payment shock. So if you're in an ARM, okay, if a borrower has reports of material change in circumstances, the servicer must ask about current income assets, current expenses, as well as specific circumstances relating to the claimed financial hardship. If you redefault on the loan will be considered to be in redefault if the borrower reaches 90-day delinquency on their current loan. There's also a trial period. Your loan will not be modified immediately. For the first 3 months, you must make your mortgage payments on time. If not, you're considered in default. Your modification will be eliminated. The borrower must be current at the end of the trial period and obtain a home affordable modification. There are no fees charged to the borrower whatsoever. The investor may not require the borrower to contribute cash. Again, I don't handle modifications. The modifications are going to come directly from your lender. But if you qualify to purchase a home, either using the tax credit or without the tax credit, or you're looking to refinance a home, I work with dozens of different lenders, and as a mortgage broker, I basically shop around for you, find the best interest rates. If you'd like information about refinancing or purchasing a home, again, my website is kirk.themortgageguru.com. I'd love to help you out with your next mortgage. If you'd like updated information emailed to you, go to my website and log on and give me your name, phone number, and email address, and I will update you with email updates as I receive them. And I'm getting information on a daily basis. We will have links for purchases, refinances. Also, you may have heard of a program that helps current homeowners pay off their homes in as little as 1/3 to 1/2 the time, with little or no change in their spending habits. Our concept that's been around other countries for years and is fairly new to the United States, so it's starting to get more notoriety here in the United States, and is absolutely a phenomenal program. As I mentioned earlier, many homeowners will not qualify for this program. If you don't, watch the loss mitigation video, then contact me. For all the details about the Obama plan, log on to www.fiscalstability.gov, which will be showing on your screen at this point. Again, log on to kirkthemortgageguru.com, and if you'd like some more information or like updates, please let me know.